The most popular retirement account out there, the IRA, should be easy, right? But it actually has some very strange rules. I'll explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so Investopedia published an article just a couple weeks ago, I think right before Christmas, something like that, about the 5 secrets of the IRA. And I was hooked. I'm like, okay, well, the IRA is the most popular retirement account out there, not because you should have an IRA, but no, you're likely saving up into a 401k, or maybe your company is contributing to a simple IRA for you, something like that. And then when you switch jobs or when you retire, you roll that money over to an IRA. So it's the most popular type of retirement account out there. But I know it has some unique rules. And so clicked on the article hoping to learn something, because secrets, boy, that secrets about an IRA, that sounds important. Well, article is included in the description below. You can check it out. I'm also going to share it here as well. But listen, the 5 that they shared, not secrets at all. Little known facts, yeah. I mean, and some of them you might, one of them maybe might be news to you, but not secrets, okay? Instead, though, I read the article and was like, okay, no. What are some real secrets? Like, what are some very unknown, little known facts about the IRA? And I've got those to share. But in the article, all right, it lists 5 of them, and let's at least hit them here so we're all on the same page. Number 1 is that there are limits on what you can invest in inside of your IRA. Now, I first read this to mean there's contribution limits. Well, of course there are, but no. They're saying there's limits on what you can choose to invest in within the IRA. Well, of course there are. Can't buy life insurance, you can't buy certain collectibles, antiques, that sort of thing. I don't think that's a secret. I don't have, in 20 years of being a certified financial planner and a full team of CFPs, I can't recall a time when someone's ever come and said, you know, I want to buy an antique with my IRA. And so I don't really think that's a secret. The second that the article listed is that your beneficiary, it needs to be kept updated on your IRA. It doesn't need to. You should. Okay, that's not a secret, in my opinion, all right? There are mandatory withdrawals. That's the third one. Yes, at age 72, it used to be 70 and a half, you've got to take a required minimum distribution. If you inherit an IRA from someone that's not your spouse, you're forced to draw that money out within 10 years. So yes, there are mandatory withdrawals. You can't borrow from an IRA. We do get this question. I don't think it's a secret. I think people are just curious from time to time. Hey, can I borrow from my IRA like I could my 401k? No, you can't. There's no borrowing. There's 60-day rollovers. You can do that once for all IRAs, once every 365 days, but there's no borrowing. And then the 5th secret is that, yes, you can invest in real estate within your IRA, and that's through a self-directed IRA. It's very, very difficult to do, very complicated to do, lots of things that you need to be concerned with, because you can't basically receive any real-time benefit from your IRA, otherwise it'd be taxable and penalized, and so a tangible property, that gets tricky to do, but it is possible. Okay, so those are the 5 secrets that the article referenced, and I wouldn't call those secrets, okay? Maybe those 1 or 2 you weren't aware of, like borrowing possibly, or real estate. I'm not sure, but I wouldn't call those secrets. What are some actual secrets? Well, these are just some lesser known facts, some unique features of the IRA that I think you should know about. I came up with a quick 6 of them. Okay, there's a lot more than that. The IRA is extremely complicated. It should be simple. It is very complicated. Let's get into those. First, and I just got this one the other day, is you've got to have earned income to be able to contribute to an IRA. Again, I don't really think that's a secret, but most people think, well, I have a limit on how much I can contribute to my IRA. $6,000 per year that I can contribute to my IRA, and I get an extra $1,000 if I'm age 50 or older. Well, in truth, your contribution limit is 100% of your earned income up to $6,000, okay? Up to $6,000 or $7,000 if you're age 50 or older. So that means if you aren't working, or if you are working and only making $1,000, or if you and this would be to college students or people that just graduated, or people that are have left their career and in between jobs, something like that, taking a gap year. Well, I don't know what it is, right? But oftentimes, if you're in that situation, you might not have a lot of income, and you might say, well, I still want to take some dollars and put it into an IRA. Well, you can't. That income, you've got to have at least a certain amount of earned income. Okay, so that's a little secret. If you're married, then you could use some of the income of your spouse, okay? If one spouse stays at home, the other spouse is working, well, you could use some of their income as long as they've earned enough in order for you to contribute to an IRA. So that's a lesser known, I don't know if I'd call it a secret, but a lesser known feature of the IRA. Second is that you know that IRAs, there's traditional IRAs, there's Roth IRAs, they share a contribution limit. Most people aren't aware of that. Most people think, well, I'll just pick one or the other. Rarely, but sometimes we get the question, well, can I do an IRA and a Roth IRA? Yes, you can, okay? But the combined contribution limit is that $6,000 or $7,000 if you're age 50 or older. Sometimes when you're trying to maximize tax credits, you might put, well, I need a deduction of $2,000 or around $2,000 to get my adjusted gross income below this threshold so that I can maximize this tax credit. Okay, put $2,000 into this traditional IRA as a deduction and put the remaining $4,000 into a Roth IRA. That still hits that contribution limit because the IRA and the Roth share that same contribution limit. It's not double. The third lesser known fact is that there's an upper income limit as well in order to be eligible to contribute. And first, I would cite that if you don't have a retirement plan available to you at all and your spouse doesn't either, or you're not married, there is no income limit on funding an IRA, on funding a deductible IRA. You could make $1 million. If you don't have a 401k available to you and you're not married or your spouse doesn't either, you can still contribute to a pre-tax IRA. You can deduct it, okay? If you do have a 401k available to you, even if you're not using it, if you've got a 401k available to you, then there is an income limit, and depends on whether you're single or married. I'm not going to get into that now, but just know that there's an income limit as to whether you can contribute to an IRA and deduct it. Well, what if you don't have a 401k available, but your spouse does? Well, then there's also an income limit in order to be able to deduct an IRA contribution, okay? And what about Roth IRAs? Whether you have a 401k available to you or not, there is an income limit, an upper income limit that you need to be watchful of there. That's an entire video, lots of details. I've just talked about that recently a couple videos ago, but that's a little known fact or lesser known fact that there's upper income limits, and depends on whether you're doing pre-tax or Roth, and depends on whether you have a 401k or retirement plan available to you at work, whether you're using it or not, or whether your spouse does, okay? So those are some lesser known details. Work with your CFP on that. Now, I would say this might be a secret. The fourth one that I would share is that if your spouse passes away and you inherit their IRA, you have a choice. You can choose to make that IRA your own. You could take it as your own IRA and convert it completely into your own name, or you can choose to treat it as a inherited IRA, okay? Why? Why do you have that choice? Well, if you're under age 59 and a half and you know you're gonna need to withdraw some dollars, if you just make that deceased spouse's IRA your own and then you start pulling money out, you're gonna have a penalty, okay? If instead you choose to leave it as an inherited IRA, well, then you've got to take all that money out. You've got to withdraw the account within 10 years, okay? But when you withdraw those dollars, it's taxable. It's just not penalized. So that, I would say, might be a secret. It's a little known fact about the IRA that when your spouse passes away and you inherit their IRA, you've got a choice as to how you take it. Speaking of choices, the fifth little known fact or secret about an IRA is once in your lifetime, you can transfer money from your IRA to your HSA. Once in your lifetime. Now, why would you do this? When would you do this? Okay, if you are approaching retirement, you don't have the cash flow, you've got an HSA eligible health insurance plan available to you, but you don't have the cash flow to make your own contribution out of pocket, or you're not going to maximize it. Then you could and maybe should consider doing that once in a lifetime transfer from your IRA to your HSA. Why would you do that? Because once it's in your HSA, that money can come out tax-free for health expenses. Think about this. In retirement, as you have Medicare Part B premiums that you're paying or other out-of-pocket medical expenses, you're going to fund those likely by drawing dollars out of your IRA. You're going to have to report that as income on your tax return, and there it is, okay? Versus if you withdraw that money out of your IRA to pay that Medicare Part B premium, that's not taxable income, okay? You can draw those dollars out without claiming that as income on your taxes. So be aware, once in a lifetime, you can make a transfer from your IRA to your HSA. There are other limits, so work with your CFP on that, see if it applies to you. And then the final little known fact or secret about an IRA that I would share with you is that something new with the Secure Act started in 1/1 of 2020, and that is in the year for adoptions or childbirth. Within the year, okay, that you adopt a child or have a child, you can withdraw up to $5,000 from your IRA or your retirement account and avoid the penalty. And if you're married, you can each do that from your respective IRAs, okay? When you withdraw that money, it's still taxable to you. It's just not penalized. Now, should you do this? I would argue no. But if you find yourself in a financially challenged situation, either to afford an adoption or because of a child, something like that, and you're looking, where can I get dollars from? You might want to consider this as an option. You don't want to raid retirement or make it a habit of raiding retirement to help with caring for children. Because listen, once you become a parent, once you start having kids, it doesn't get easier to save for retirement. I'll tell you that. But just know that you've got that option. All right. There's even options where you could choose to repay this money beyond that 60-day rollover window. You could do this for each child. Okay. So be aware of this option. The IRA, like I said, it's going to be the most popular retirement plan out there. It should be very simple. It's thought of as very simple, but it has some very unique and strange rules. Work with your CFP. Make sure as you're doing comprehensive financial planning, as you've got financial choices to make, your CFP is aware of these unique rules, can help guide you on what choices to make. That's financial wisdom. That's why you need comprehensive financial planning. When you have a choice, looking at all of your options and saying which choice is best, and hopefully some of these rules about the IRA will help you figure out what your options are. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.